Good morning, and thank you for joining us. We'd like to let you know that this webinar is being recorded and will be posted on CCEDC's website, as well as the county website, and shared on social media at its conclusion. All of you are coming into our webinar right now, so I'm hoping that you're all hearing us, and if you are having any issues, please use the chat function and share that, and we'll try and assist you as we move forward. So this morning's webinar, we have a goal to provide information to you about the eligibility criteria and application process associated with the COVID-19 Hospitality Industry Recovery Program, or CHIRP. This will be the third grant program that is provided through the County of Chester. The first two, called the Main Street grants, enabled us to help 581 small businesses by awarding them over $15 million. This grant will be unique, however, in that it will be focused solely on the hospitality industry. We will be using NAICS codes to be able to provide your eligibility. 721 will reflect on the accommodations part of the industry, and 722 will also be about food service and drinking establishments. This funding is being provided by the Commonwealth of Pennsylvania, as Pennsylvania dedicated $145 million to help relief in this area. Because of our population here in Chester County, we were awarded $5.9 million. The Chester County Economic Development Council will once again partner with the County of Chester in administering this grant because we are a CEDO, a certified development organization. Right now, joining us are the county commissioners who have a few words and would like to say hello. Good morning to Marion Moskowitz and Josh Maxwell. Marion is the chair of the county commissioners, and I'll turn it over to her.
Thank you, Mary Fran. Thank you everyone for being here. We all know how hard the hospitality industry has been hit by COVID. And so it is really terrific that we're able to bring this program to you for these two NAICS codes. And we just want to do everything we can to make sure that you come out of this and you're vibrant. You're so resilient as an industry anyway. And I'm so proud of all of the work that you're all doing to keep going every day. Thank you. And I just want to add, Commissioner Kickline could not be here, but she sends her thanks to you as well. And she's excited about this program. So again, thank you from the bottom of my heart. I know you're working hard every day just to stay afloat. And this is really important that you're here. I'll turn it over to Commissioner Maxwell.
Thank you. Thank you very much, Chair. Just want to remind everyone that this webinar is meant to be a resource. Please share this with your network. We want to make sure anyone who is eligible for these funds has the opportunity to apply. This is a partnership between the Economic Development Council and the County of Chester as a government to make sure that everyone in Chester County who's eligible for these funds has the resources to apply, and that as a community we can get those applications in an efficient and effective way, making sure that we don't leave any funds behind. Looks like we have $5.9 million in CHIRP funds for the county. Just want to remind everyone that the county distributed $10 million in January through our Main Street program with an emphasis on restaurants and other in the hospitality industry and those who have been most affected by COVID. And then $5 million almost a year ago in the spring. So we're going to do everything we can. We're hearing what you say. Please keep us in the loop on what's happening in your industry. And we'll continue to work with the Economic Development Council to make sure that you have access to everything you need to get to the other side of the COVID-19 pandemic. Appreciate everyone's time.
Thanks, Commissioner Maxwell. So just a few key ideas here for you to keep in mind. This window for this grant will open on March 15th next week, and it will run until April 12th. The applications will be online on the CCEDC website, and you will be able to take advantage of tech support through the online portal. You will also be able to provide email questions directly at granthelp@ccedcpa.com and tech support@ccedcpa.com. Remember, we will provide this information to you throughout the webinar, so please don't feel that you are going to have to be writing things down right now. At this moment, I would like to turn it over to my colleague, our Senior Portfolio and Compliance Manager, Chris McHenry, who will tell you about the program. Chris?
Thank you, Mary Fran. Thank you, commissioners. Welcome, everyone. Good morning. Back for our third round of grant discussion. I know that we all wish that we didn't have to do this, but this is a good program. It was a great program. It was started by the Commonwealth. I'm going to share my screen now and get to my first slide. I think important to note is the eligibility requirements for this grant are established by legislation, by law. So we have to follow them in strict adherence. It's part of the rules of being able to do this. As Mary Frances had said, it is specifically for businesses that file their taxes under NAICS code 721 or 722, which are the accommodations and food service industries. There is one carve out that slightly expands it, which we will get to in a moment. As Mary Frances mentioned, we're going to receive $5.9 million in funding and distribute that to those businesses. Our window opens Monday. I think very important to note for everyone is this is not a first come, first served grant program. All applications received between Monday morning at 9 a.m. and 5 p.m. on April 12th will be reviewed. Everyone will be as eligible regardless of when they applied. It will just boil down then to a matter of several factors that we will get into as to the awarding of the actual grants. But you do not have to rush to get in on Monday. You do not miss out if you apply at a different date. Grant amounts are going to be determined based upon the historic gross receipts on the 2019 tax returns of the applicant businesses. There is a scale where we will be awarding grant amounts between $15,000 and $50,000. For those of you that were not active and were not open in 2019, there are other provisions we will go through. All businesses will be eligible as long as they were formed and were open for business on or before February 15th of 2020. I mentioned before one of the carve-outs, and this information came to us through the Pennsylvania Economic Development Authority, which received direction from the legislators. So many times a microbrewery, a winery, or a distillery may have an on-site restaurant or an on-site bar where they're licensed to serve food or alcohol. But because they're also manufacturing the product they're selling, they file under a different NAICS code, usually starting with a 3 for a manufacturer. Those businesses are eligible to apply for this grant. However, they must be licensed for on-site consumption, and their decline in revenue and their revenue amount that sets the amount of the grant award is based only on the gross receipts at the location. In other words, the over-the-counter sales. So those industries, as we'll discuss later, are going to have to submit separate financial statements that reflect just the on-site sales activities and not any wholesaling. Applicants must be current with taxes, county, state, federal, etc. For the accommodations industry, this includes having the hotel PAC, the hotel occupancy tax, which is payable to the county, current as of December 31st, 2020. For food and drinking places, the license to operate the facility issued by the Chester County Department of Health must not be more than 30 days expired. If someone is awarded a grant and they are behind on their hotel occupancy tax or have not yet renewed their health license, they will have the opportunity to cure that. They won't be ruled ineligible. So that's a very important factor. We're going to allow you to cure the delinquency before we award the grant, but you will still be eligible. As I mentioned before, businesses must be open and operational on or before February 15th of 2020. You're going to have to certify your intent is to remain open for the next year. You have to have, businesses must have less than 300 full-time employees at the time of application. And that is a very specific formula in the legislation, dividing all hours worked by all employees for calendar 2020 by 2080. Please note that I mentioned calendar. This will become important too when we get to the financial statements being submitted, regardless of the fiscal date a business may file, which could be a date other than December 31st. Anything we talk about being quarterly or measurements are on a calendar basis. Only one grant can be applied for per Chester County business with a unique tax identification number or federal employee identification number. So an individual or group that owns more than one restaurant or one hotel in Chester County, if those restaurants or hotels file separate tax returns with separate EINs, they are both eligible to apply, which is different than the other grant programs we've run in the past. If there are two restaurants that operate under the same employer ID number, you are only going to be able to apply for one grant, even though you have two locations. The tangible net worth of any applicant may not exceed $15 million as of December 31st, 2020. Naturally, the business must be physically located in Chester County. Where the owner resides, where the business is incorporated out of is not relevant. It's where the operations take place that matters. By the same token, a Chester County resident that may own a business that's not located in Chester County would not be eligible for this program. They would have to apply through the county where their business is located. You'll have to certify that you're not going to apply for or receive another grant under the CHIRP program before June 30th of 2021. That gives me a little hope. I believe that the legislators are looking to potentially increase funding in this later. We'll have to stay tuned, but hopefully that's why that's in there. And to be eligible, you must document a 25% decline in gross receipts due to financial impact from COVID. We will get into that in a moment, but I think right now I just wanted to check with Mary Frances. Are there any questions that have come up?
There are a few, Chris, and they are related to that NAICS code. I had a question about, I'm a gym and am I eligible for this program?
So a gym would not be eligible for this program.
Okay. I'm a vending business. Do I qualify for this program?
A vending business does not qualify for the program. It's on-site, in-person food service and drinking. So that would not qualify.
Terrific. This last question I think you covered, but I'll ask it anyway because it came in. I have 3 different locations with different EIN numbers, but they are all in Chester County. Are all 3 eligible?
Yes, you should be filing 3 separate applications.
So what if I'm a food truck and I'm licensed to serve food for my food truck and I'm in Chester County? Do I qualify?
Yes. Food trucks are covered by the NAICS code and they do qualify.
Terrific. An ice rink. I think we have an ice rink that we've serviced before, Chris. I'm an ice rink with food service. Am I able to qualify?
If the food service at the ice rink is run through an entity that's separate from the entity that runs the operations of the ice rink, then yes, that restaurant entity can apply. However, if it's all under one umbrella, likely your NAICS code's not going to be in the 720s, and therefore you would not be eligible.
And lastly, I'm a catering company with no brick and mortar location, but I operate from Chester County. Am I eligible?
You are eligible. Part of the application is you are going to have to certify that you work in Chester County.
Terrific. We do have a question related to the decline in gross receipts, but I'll wait until you go over that again and then we'll revisit that. Okay, Chris?
Yep, we're actually, we're going to go over how to measure an eligible loss. So that should hopefully answer the question, but we'll come back to it.
Okay.
So bear with me one moment. How to calculate the eligible loss. I will tell you right now, this can get very confusing. There are multiple methodology, and the reason the legislatures of our state put the different methodology in is they did not want to avoid being able to assist businesses that opened up in January of 2020, got to operate for 5 weeks, and then all of a sudden couldn't continue to operate. So the different measurement tools that are that we'll be using are on the next few slides, which of course will be on the website, and we'll take questions in a moment. And then if you pop up, also, we will also be taking a Q&A at the end too. So if you miss getting your question answered after this section, please go ahead and enter it, and we'll catch up to it in the end. So if the business was open and operational before June 30th of 2019, your measurement is any quarter in 2020 whose matching quarter from the prior year in 2019, they show a 25% reduction. So if in the third quarter of 2019, you did $100 in sales, and the third quarter of 2020, you did $50 in sale, you had a 50% reduction, you are eligible. So for those businesses, it is matching up a specific quarter with their corresponding quarter from 19 to 20, and then showing a 25% reduction in gross receipts. Gross receipts is any money the business has taken in from its operations. If your business opened in the second half of calendar 2019, well, not second, in the third quarter of 2019, I guess I should say, and you were opened if you opened up in the third quarter between July 1st and September 30th, and you were only open for that third and fourth quarter in 2019, then you will have a loss by measuring that against any quarter in 2020. So what the suggestion is, you take your highest quarter of sales, gross receipts from 2019, whether it be the third or the fourth quarter, and measure it against your lowest quarter in 2020. And if there's a 25% loss, you are eligible. If your business was established in the fourth calendar quarter of 2019, you are going to measure you're going to take your 2019 gross receipts, and if any quarter in 2020 showed a 25% reduction in gross receipts compared to that fourth quarter of 2019, you are eligible. You do have a sufficient loss. If your business opened in 2020 on or before February 15th, we are going to measure your first quarter sales against any of the second, third, or fourth quarter of 2020 to see if there is a 25% reduction there. What is important to note is you may have only been open for 2 weeks. You might have opened your business on February 1st and had to close and only had 2 months instead of 3. We are going to take an average. We're going to average out what would your sales have been for the entire quarter if you had gross receipts, that were constant and even. And then we're going to extrapolate that first quarter revenue and compare it against the rest of 2020. Very confusing. You're welcome to call us. I know it can get difficult. Look at the slides. And if you're in doubt, my suggestion is apply. If you think you're close, if you think you had that 25% loss, then apply, because we will go through it and we will check it. And if you're eligible, we will put you into the pool to grade the competitiveness of your grant application and see if you get an award. Just a reminder, not everyone that applies is going to be able to get an award. We have many, many businesses in Chester County that fit into these industries. And although $5.9 million is a whole lot of money for one person, it's not much when you're looking at stretching it across all these businesses. One other note is if the business entity or the business changed ownership, you may use the prior financials of the business you took over. So if you took over a business, bought the business in 2020, and it was open for all of 2019, you're going to use that. We're going to use that first example of how to calculate your loss. What's important in this is it only counts if you purchase the entity. So if you bought a restaurant but opened a new entity to run the restaurant, that will not count for being able to look all the way back to 2019. You will have to go to the other examples using the date that you bought the operations under another fictitious name or another legal entity, and use that date going forward to measure your loss. So Mary Frances, with that, I know it's a very confusing area. I'm pretty sure there are probably some questions in there.
Chris, we did have a few that were back about the essence of the building, of the business, and were they eligible, the basic eligibility questions. Would you like me to hold those to the end and just talk about the calculation of loss now? Because we have just a few that came in late on the eligibility questions.
Yeah, why don't we go through the rest of the slides? We'll come back to them because more may come in. We might have some
Okay.
duplicates we can cover then.
Terrific. So a couple specifically related to the loss calculation. I think they want the general question was about which quarter do they have to show the decline in gross receipts. I think you were using a few different suggestions for that. And I know it's challenging, but maybe you can summarize.
Sure. So the rule of thumb is if your business was open for all of 2019, you're going to take either the first quarter of 19 against the first quarter of 20, the second quarter of 19 against the second quarter of 20, and so on for the third and the fourth quarter. And if any of those calculations show a 25% decline in revenue for any one of those quarterly comparisons, you are eligible. If your business opened up in the third quarter of 2019, then you're going to take your third quarter of 19 against your third quarter of 20, your fourth quarter of 19 against your fourth quarter of 20, and see if there was a 25% decline in revenue there. If your business opened in the last quarter of 2019, you're going to take your last quarter gross receipts and compare them against any quarter in 2020. Naturally, you're going to go to the quarter in 2020 that had the least sales. And if there's a 25% reduction there, you are eligible. If your business opened in 2020, and let's say in the first quarter, there were 12 weeks there's 12 weeks in the first quarter. I think it's 13, but the math's hard. And you were only open for 6 of those weeks in 2020. Basically, what we're going to do is we're going to take your revenue for those 6 weeks. We're going to double it for our calculation to get what would have been a normalized full operating quarter and compare that against the second, third, and fourth quarter of 2020. If there was a 25% decline between that extrapolated first quarter and any of the other quarters, you are eligible. One other item to note, and this does not have to get done, if your 2020 tax return is done for the business, you'll be asked to submit it because there is an additional test that if we take the full year revenue from 2020, compare it to the full year revenue from your 2019 tax return, and there's a 25% overall decline, you are also eligible under that. But you do not have to run out and get your tax returns done to submit for this grant.
Okay, the rest have to do mostly with the NAICS code and with their eligibility. So we'll hold those to the end, Chris.
Okay. I'm sharing. There we go. In this legislation, the state has carved out what they're calling priority businesses. There are 3 different criteria that would establish an applicant as a priority business. You only have to meet one of the 3 to be a priority. What priority means is all the priority businesses will get the first bite at the apple. So when all the applications are reviewed, the first awards will go to priority businesses. If the funds are exhausted with that, then that is going to be the end of the program. If there are still remaining funds, will go to those businesses who are not defined as priority businesses under the law. So utilizing the same calculations that I had just gone through, if there is a 50% or greater reduction in any of those categories, you become a priority business. If you have not received any COVID relief funding, now this includes loans and grants, so forgiven or unforgiven PPP, EIDL grant, the EIDL advance, which was a grant, the EIDL loan, the state COVID working capital assistance loan, or any of the Chester County Main Street or other grants through the state, such as the one the CDFIs ran that has just wrapped up. If you got any of that, you're not going to meet that criteria. But if you have received nothing in loan or grant for COVID relief, you become a priority applicant. Lastly, if the Commonwealth's order from March and then again in December forced your business to close. So it's if the order forced you to close, not if you opted to close. But if you're unable to continue operations for a period of time based on those orders, you also are a priority business. So we'll be looking to see how many businesses meet that. We are required by law to set up tranches. So all the priority businesses, again, will get the first bite at the apple, and leftover funds will then go to non-priority businesses. With all the applications that are going to come in, we have to have a way to segregate, as with any program, who really, appears to have the most need. It's the most difficult part of the process for us here at the Economic Development Council, as well as the folks over at the county, because you're essentially weeding people out to say no because you just don't have enough funds to go to everyone. So our key criteria that we've established for this program, very similar to the other programs. What was the actual percentage decrease in gross receipts for the business? How much other relief or funding have you received? How long has your business been around? Is your business owned by a minority, veteran, or woman at 51% or more ownership? And then, is your business located in a high unemployment area based on census tract? Those are the key criteria we're going to use to try to differentiate. It's not perfect, it never is, but it is the best we could do to try to get the funds out to those that really need them the most. We always get questions, and they're fair questions. How can I use these funds? Under the legislation, these funds are reimbursement. So they are to be used to reimburse you for the money spent on eligible expenses between March 1st of last year and the date you put your application in. So that's any common operating expense with the business, payroll, non-payroll, that are considered ordinary and necessary. So ordinary is something common for the industry. Linen service, if you're a restaurant or a hotel. Inventory for food service. Costs of maintenance. And again, your payroll. And then necessary expense means just kind of one that is helpful and appropriate for the trade or business. These are written, I believe, very intentionally to be broad. What they're looking to do is exclude any wildly unnecessary expense getting reimbursed through the grant program. So I think this is kind of a common expense test. You're going to self-certify this as the applicant. So we are not going to be collecting receipts. We are going to ask you to state how you plan on using, which expenses you plan on reimbursing that you've already incurred. And we're going to ask you, what are you looking at going forward as far as needs? And you'll answer that and certify those questions as part of the application. There are a few different areas that have been specifically defined as to what makes an expense eligible. So for commercial mortgage payments on your business location, for rent payments, for utility payments, that mortgage, that lease, those utilities must have been in place on or before February 15th, 2020. If you had a mortgage, you had a lease, and it was renewed or rewritten, you got a new loan to replace the old loan, you re-upped your lease, and it was after February 15th, that's okay because the original lease, the original loan was in place before February 15th. Again, this is a self-certification. Ineligible funds. So if you have received PPP, if you have received previous grants and you stated in there, you're going to use them for specific expenses. These grant funds can't be used for the same expense. So if you took PPP and you exhausted PPP on your rent payments and your payroll, you're going to have to be able to state that you had other expenses that occurred between March and December of 2020 that you will use the grant for. So that includes the Main Street grants that Chester County has run and the EIDL advanced grant portion. The Pennsylvania Small Business Grant Program, the CDFI network just ran, any other public sector grant funding. Now, this is grant. If you borrowed money, if your PPP was not fully forgiven or has not been forgiven, that's not going to count towards this. So we're looking at not using this grant money to replace other grant money for the same expense. The grants can't be used for dividend distributions, capital return to owners, payments to owners. They may not be used to pay 1099 employees or subcontractors. The grant proceeds may not be used to pay tax obligations. And they cannot be used outside of Chester County. The big question, what are we looking for as part of the application? Really, not a whole lot, although there is one key element we'll get to in a moment. The application is going to be online. You're going to fill the application out online. At the end, you're going to hit submit. You will get a submission confirmation number. Please note that you cannot start it and come back to it later and save it. It must be done in one sitting as you go through it. So I will encourage you to please go to our website, look at this document. We're going to put a document up that's going to give you application tips or what you need to be able to do to apply. But initially, we're just going to ask you very basic questions: name, address, phone number, how many employees do you have, how many people, and who are the people that own 20% or more of the business. We're going to ask you what other COVID relief funding you've received, specifically by category, by funding type, Main Street Grant, PPP, EIDL, etc. Brief questions about your business, what it does, how COVID's impacted it, what your intent is for the proceeds. And then we're going to have you submit the 2019 business tax return. As I mentioned before, if your 2020 tax return is done, we're going to ask you to submit that as well. It is not a requirement, but if it is done, it affords another test to check for both eligibility and your priority status. If you are someone who files on the Schedule C on your personal tax return, we must have the entire personal tax return. So please upload full tax returns, whether they be business or personal, for Schedule C. Next, we're going to ask you for management prepared. Your CPA, of course, most likely could help you with this. It's not necessary if you're using something like a QuickBooks to manage your income and expenses in the business. We have to have profit and loss statements on a quarterly basis for all of 2019 and all of 2020 when you were open. So if you opened in July of 2019, you would only have third and fourth quarter. We will need those. So they must be split out by calendar quarter, January 1 to March 1, April 1 to June 30, etc. That is how we are measuring the loss. If we don't have them, we cannot process your grant application. As mentioned before, the grant window will open Monday. You will have 4 weeks. April 12th is 4 weeks from March 15th to get your application in. There is no rush. We suggest you don't wait to the last minute in case you have problems, but getting it in March 15th or March 29th will not make a difference in your eligibility or the rating of your application. It will be submitted through the Chester County Economic Development Council's website. There's a portal there that will take you to the application and provide the secure upload for all your documents. All the documents must be uploaded as Adobe documents with one Adobe file per document. So if you have a tax return, it's 8 pages long, that has to be one document submitted, not 8 separate scans. We have 2 email addresses to help you. Tech support, if you're having a problem uploading your documents or getting the application to work properly. And then for questions just on the actual program itself, or questions on what should be submitted or how things should be answered, please email the grant help email address that you see there. And I guess now, Mary Frances, we can go back and catch up on some questions.
Okay, here's a couple basic ones to start, right? Where do I find my NAICS code?
The NAICS code should be on your tax return. So if you have, I'm trying to remember exactly where, but I believe on the 1120 and the 1120S for corporations, it's on the left side of the name. The partnership return, the Form 1065, it's on there as well. And then if you file a Schedule C and you had a separate, business, you should have a NAICS code at the top of your Schedule C as well. If you are in doubt, you can Google it. What's my NAICS code? It will ask you to look up what industry or business you're in. Or perhaps your accountant may know if you can't find it on the tax return.
How about not-for-profits? Are nonprofits eligible?
No, it must be a for-profit business that is not publicly owned. In other words, you haven't sold stock in the open market.
How about this one? Cafe. I'm a cafe and a catering company. But my NAICS says I'm a specialty food store. Do I qualify?
It's going to go by what's on your tax return. So whatever was on your 2019 tax return is how eligibility is tested.
Okay. How about I'm a catering company with cafe and indoor seating, all under my EIN. Do you believe I qualify?
Yes.
Yeah, I thought so too.
Both caterers and a cafe, they are both eligible under those NAICS codes.
So I'm a business in Chester County, but I have a commissary in Berks. Can I apply in Chester County?
If your sole business operation is that commissary in Berks County, you are not eligible because that's not where you're operational. I would contact the Greater Berks Development Fund or Berks County and check with them on their program and their guidelines.
Terrific. Okay, another one with regard to location. I have one Delaware County business and I expanded into Chester County in May of 2019. Both have the same one EIN number. Can I apply using just the numbers that are associated, the revenue numbers associated with my Chester County location?
Yes, that's exactly what we'd like you to do. Just apply for that Chester County location. I would suggest that you attach a note or within the comments on the application, put down that you have done that so that we're aware. And if you elect to apply through Delaware County for your Delaware County location, I would suggest that you do the same with them and let them know that you have not included any Chester County numbers.
So how about this one? This talks about a percentage of loss. So annual loss was greater than 30%. Do we really only submit that one quarter?
No, you must submit every quarter the business was open from January 1st of 2019 through the end of 2020.
If we were in operation for 20 years and we closed in 2020, do we qualify?
If the business is closed, you do not. Part of the grant program is that your business will remain open for 1 year following receipt of the grant.
But if we were subject to a closure because the governor said we had to close, how do we prove that we were subject to the closure?
Well, you're going to make a statement on the application. So, and forgive me, when you said closed, I thought you meant they shut the business down.
No, they were two different, I'm
Oh,
sorry,
okay.
they were two separate questions. One was the historic 20-year and I closed and do I qualify? The other is now about your self-certification answer, I think, Chris. How do we prove that we were subject to closure?
You're going to check off that you were subject to closure as part of the application. And then we are going to be comparing your business to the governor's list of businesses that were ordered to close. So, hotels, I think, are almost a certainty. I believe they were all forced to close. Restaurants becomes a little difficult because you were allowed to stay open for takeout and delivery. Some restaurants may have been able to switch to that. Some restaurants may not have been able to switch to it right away, in which case they would technically have been closed. So really that's, as you're answering your subjective questions, and it's going to be tough, they're only about 200 characters a piece, but note that in there, or if you wish to attach something, I would suggest maybe if you want us to know some more information, put it down on paper and scan it in as part of your quarterly financial statements on the front, and then we'll see that when we go in and look at that.
That's a great segue to our next question. If we continued takeout and delivery, but not our indoor seating, does this count as a closure or a priority for us?
You would not qualify as a priority under that. You were able to stay open. The intent of the legislation is businesses that were forced to fully close and not operate at all.
Okay. How about this one? We're talking about some extra funds, PPP. PPP was used for rent. Can the reimbursement amount be deducted from the other rent, or can we use the CHIRP? Can we use this for rent as well?
You can use it for the portion of rent that was not covered by the PPP. But it may be easier to look at your other expenses as well. Utility bills, electric, payroll, taxes, inventory if you were still open and operational, cost of your COVID compliant expense. What have you spent on takeout? I mean, a restaurant down the street from where I live spent a fortune on takeout boxes because the minute COVID hit, the suppliers cranked the prices up. So look at everything, all your COVID compliant costs, the masks, everything else. If you installed better air filters, air handling systems, like some restaurants and hotels have done to purify the air better. If you've gone and you've bought, ozone cleaners to stick in hotel rooms when guests leave, that all counts as expenses. So if possible, don't use the same category. If you need to use the same category, you need to be able to document that I only had $5 in PPP to cover my tenant rent. This other $5 I'm getting from this grant is covering the rest of it.
Okay, I have this on the financials. What if our P&L hasn't been prepared by our accountant yet? Can we use gross receipts?
You would have to prepare a P&L on your own then. We need the profit and loss numbers. So if your accountant's unable to do it, you may produce it on your own. We have gotten handwritten profit and loss statements that had the right categories. It had revenue, it had expenses, it had a net income or net loss at the end. And that's perfectly acceptable. We understand that a lot of the smaller businesses, maybe, and not to single anybody out, but bed and breakfasts, a small restaurant that might only seat 15 or 20 people may not have invested 5 or 10 grand in accounting software. But we're going to need you to sit down with pen and paper on your computer and pull that together for us. It's the only way that we are allowed under the law to look at your loss and decide if you are eligible or a priority.
And this one sort of ties into that, Chris, on the uploading of each document, right? So where it calls for that, they'd have to upload that prepared P&L. Does it have to be separate PDFs, or can the entire document be scanned? And I think you just answered that, but would you just address that one more time, please?
Sure. So the tax return would be one scan, your 2019 tax return. Your 2020 tax return would be a second upload. And then for your quarterly statements, you can scan them and upload them all together.
Okay. Is there any help at all for businesses that were opened in 2021?
No.
That we're aware of?
No, they have to be open on or before February 15th of 2020 to be eligible.
Terrific. And here's one that's really interesting to me. If I received the Main Street grant, may I also apply for this?
You may apply for this, and I apologize for having to look at me twice on the webinars.
Okay. And one last thing, when will the applicants be notified?
That's the great question. We have talked an awful lot about this internally here at the Economic Development Council and with our friends over at the county. The program window is going to remain open through Monday, April 12th. We are going to be looking at applications as they come in, but we're going to need at least a week after the 12th of April to be able to finish processing all of the applications that were received in that last week. At that point, we have a review process we go through with third-party Chester County citizens that volunteer, that are business leaders and not-for-profit leaders, and just really wonderful people that spend an awful lot of time looking at these applications. And it goes through there for sort of a proof. From that point, we submit it to the county, because the county, we have to have the county concur on our decisions. That process is probably going to take about 2 weeks. At that point, we should be able to notify everyone that has received a grant that they will receive a grant. And unfortunately, those that didn't get a grant would be notified then. I would look for that notification the last week of April. And then I would expect about a month for processing of the grant. So there will have to be contracts drawn up that we will send to you. and W-9s that you will have to execute and return to us. And then it has to go through a funding process. You're dealing with state money. State money means tax dollars were used. So there are a lot of double checks. I would expect, my hope is that all the funds are distributed and received no later than the middle of June, which I know is very difficult given that we are now in the middle of March. But with the 1 month application window, the month to process an award, and then the month to document and send the funds, it just does take that long.
Okay, one quick last question on a P&L. Should a P&L include depreciation or just costs, just real costs?
If it's already on there, leave the depreciation on. If it's not on there, you don't have to enter it. You know, that add back for non-cash expense isn't as important in this program. It's not important in this program. So whatever you have, send it. Don't go tweaking it. That's not necessary. It won't impact your eligibility or your competitiveness.
Thanks, Chris. Thanks for handling all these questions for us and for the people who were brave enough to ask them. We appreciate all this, but we just encourage you to remember that you have the opportunity to ask these questions through email specifically for your help at granthelp@ccedcpa.com or at techsupport@ccedcpa.com. Again, this recording will be posted on our website as well as the county website and shared in social media. We appreciate all of you who have taken the time to tune in to learn more about this program, and we look forward to helping many of you find the relief that you so desperately need. Please try and hang in there. And I love this beautiful weather. I'm hoping you're going to be super, super busy over this weekend.
Yeah.
Take care and God bless.
Mary Frances, one other quick comment before everybody goes, and that is that the president has signed a new act. And I believe he signed it yesterday. And that also includes significant provisions to help the same industries we're helping here. So pay attention. We look for that to come out. That is likely, it looks like it's going to be processed through application to the federal government, probably through SBA, but there is more relief that's out there that we expect final rules to come out, and applying for this or applying for that does not prevent you from applying for the other.
Terrific, Chris. Thanks again. Take care now and have a great weekend.